Hey friends, I just want to share with you this company, Natuzzi, that I came across and I think it is currently undervalued. So despite its strong run up by more than 10 times over the past 1.5 years to about $18 a share currently, I see there's still potentially up to 100 to 200% upside. So here's why. I will not go into the details, but just a few main pointers that I think are important. Okay, first, what does the company do? Very briefly, Natuzzi is a luxury furniture brand in Italy with over 60 years of history. The company has a strong presence in Europe, but it has presence in the US and Asia as well, with plans to expand aggressively in the US and China in the coming decade. So, what has plagued the company over the past few years before its astronomical rise recently is mainly due to the excess manufacturing capacity and overstaffing associated with union representation. But recently we saw some tailwinds in the pickup of the furniture sector with increased backlog and accelerating written order growth recorded by the company. So the second quarter 2021 written orders increased 102% versus second quarter 2020 and 27.4% versus second quarter 2019. And they are now operating at near full capacity. This has created some operating leverage shown by the increase in gross margin reported in the latest quarter. First half 2021 gross margin of 36.1% increased from 30.8% in the first half 2020 and 29.1% in the first half 2019. But I guess banking on the recent positive improvement may be a bit risky by itself. The opening of the economy and the new norm of working from home could have boosted sales for Natuzzi in the short term. However, I see there's some change in management with strong track records, and they have a strategy to expand the company's business in the coming decade, and I think that's how they are going to help shareholders uncover value from their stocks. For instance, Natuzzi hired a new CEO, Antonio Archila, in June 2021. He was previously the global head for luxury practice at McKinsey with 25 years of experience supporting a variety of brands and retailers on strategy, digital organization, supply chain, growth acceleration, and operational improvement. The company has a target to increase its US directly owned stores by 10-fold or 150 stores in the coming decade. Now let's take a look at the company's valuation. In terms of revenue, Natuzzi is expected to generate about 450 million euros or $525 million for fiscal year 2021. Next year's revenue may be looking at around $570 million with new stores opening and expecting EBITDA to hit around $50 million for the fiscal year of 2022. First off, we see comparable furniture companies trading at about 1 times sales. And one close peer for comparison was Poltrona Frau, which was acquired by another company, Hareworth, back in 2014 for about 1.5 times trailing sales. As a matter of fact, Natuzzi is the European lifestyle best known brand in the upholstered furnishing sector worldwide. It's supposed to be a more well-known brand than Poltrona Frau. But let's just take a 1 times sales multiple for valuation purposes. So based on Natuzzi estimated sales of $525 million for fiscal year 2021 and 11 million outstanding shares, that will value the company's share price at $47.70. Besides that, the company has a 49% stake in China joint venture with Kuka and is valued at around $55.7 million, and this will translate to about $5 per share. Thus, combined, Natuzzi should be worth about $53 a share. This represents an almost 200% upside from the current share price of around $17 to $18 a share. Of course, execution risks remain. While the company is becoming increasingly profitable, it needs to also show improving cash flow while trying to grow its business per their long-term plan. Also, the COVID-19 pandemic continues to be a concern in the near term as the economy struggles to resume back to normal. Any new strains or lockdowns will adversely impact the company's business, just like back in 2020. So with the risk considered, say if I shave off 30% from the $53 target share price as a margin of safety, the discounted valuation of $37 per share still represents a 100% upside. And with the improving economics of Natuzzi's business, better leadership and management, I'm positive that the hidden value will be uncovered eventually, if not soon, especially since valuing with a 30% margin of safety still implies a 100% upside. So I'm adding some positions to my portfolio. Anyway, I hope what I share with you today is useful. Do subscribe to the channel for more tips and updates, and appreciate if you can give us a thumbs up if you like what I share with you today, and I will see you next time.